All right, traders, welcome to today's recap. It is Tuesday, May 22nd, and this is Christian from Hertz Tribeca Trade Group with your end of day recap, market and option. Okay, so what do we get today? Well, a little bit of a mess today. We are having difficulty with this 2741 level, or maybe you want to call it 2742 in S&P futures. Notice I've got a dotted line drawn here for the day. Why do I have that line? Whenever you have a line drawn or trend line drawn or an indicator on your charts, you want to always have a particular reason for having it on there. But it seems that we're having some difficulty with this level. We hit this, I think this was not last Friday, but the Friday before that, 514. Try to go higher, could not go. Or maybe it's the Monday after that. Yeah, sorry, the Monday after that, where we tried to go high. So last Monday, where we tried to go higher, we failed. We kind of got caught in a little bit of a chop. On Monday, we gapped up, and but however, have not been able to take out this same level. And then today we hit it again, and there doesn't seem to be any buying, any institutional buying really jumping in and getting involved here. So, what does that mean for now? I think it means that you have to be a little bit more patient with what's going on today. The sell-off today, there was a headline about OPEC possibly cutting production, which brought everything down. So it looks like, and I'm stealing a quote from, I think it was Gorman, who was in an interview today, CEO of Morgan Stanley, who mentioned that the risks are to the downside right now. Do I believe that, or do I agree with that? I kind of do. It seems like when we are having good news, the market is very subdued, right? We had good news over the weekend. Futures moved up overnight, and we really didn't go any further than that, up 60, 70 basis points. We had trouble with going higher. Whenever there's a little bit of bad news on the tape, it feels like this market wants to go lower, and there's a bigger reaction to the downside. So what that means again is that you want to be careful in this market. In my opinion, again, this video is for information only, and I just talk about what I do and what I trade. But it tells me that you kind of have to take, not necessarily a big pause, but you just have to kind of change the way you're trading a little bit. So, not adding too much risk, making sure that you're taking off more risk than you're adding. And not being caught up too much by the tape. So for example, today's option flow, there really hasn't been anything bad to say about the option flow, right? I mean, there are call buyers. Look at all the calls I have for today. Now, energy, right? I want to talk about two different things in call buying. We saw option call buying in just about every name the last couple days. In energy, you name it, offshore names, refiners, more gas names, especially this morning. But a lot of the trades that we're seeing on the tape are what's known as, they're kind of dumb money. Why do I call it dumb money? Because they're just chasing momentum. So I don't really take any of those trades other than maybe for a day trade. What I look for is for somebody really big, for somebody who really who puts down a big chip. I did this weeks ago in Devon Energy. I thought that was a really good signal. You can see, and I actually got lucky today. I actually sold it. I didn't sell it right at the highs, but I sold it when it was about flat today. And I said that was enough of the trade. I mean, this is the swing that this thing's been under. And I held this trade, I rebalanced it once, but I've been in this Devon Energy for about 3 weeks, I want to say, since it was below the 200-day moving average, right? And that was good. That was really a good signal because they were going out to October. First they went out in short-term calls, but then they started going after October calls repetitively. And they weren't putting down, there's a difference in size too. When you start to see like a $500,000 trade hit the tape or $1 million trade hit the tape in terms of option premium, that to me is notable. Not the stuff that's going up today that's like a $10,000 trade. And I get it. People are flagging that stuff on Twitter, but that's where a little bit of experience is necessary with this stuff. I'm not going to follow personally, a $20,000 trade, that's peanuts, right? And that's what guys are jumping up and down about on Twitter about call activity. So you have to be a little bit disciplined to not go after, momentum guys. We saw a lot of that today in the financial space as well today. I've been sitting long with a couple financial names. I did not add to anything in the banks today. Why? Because it's, a name like Jpmorgan. So I'll give you an example. Jpmorgan. And again, foot the order flow with the time. There was a nice looking trade today in Jpmorgan. Calls swept, right? Everybody wants to see when calls are swept. June 112 calls. What time did they go up today? 11:29. So you're telling me that you're going to buy Jpmorgan after it's up 2%? How much more? And I said this when the order went up. I'm like, I'm not buying that. It's already up 2%. How much more do you think it's going to go up? And sure enough, we hit this virgin point of control, and that was it. Somebody asked me about this on Twitter. They're like, "Oh, I just bought some Jpmorgan calls, June calls." I'm like, "Are you serious?" I didn't say that to them, but why would you be buying June calls? Do you really think it's going to have that much momentum? Do you really think that you're going to get the timing right? Just because you saw a call buyer on the tape who bought June calls? And again, this is more that to me is not a smart order, right? The guy who buys this is not a bad setup, by the way, in Jpmorgan. Just don't get me wrong, but I'm not going to chase calls that are going out. First of all, do you know how much time decay is on front month options? So first of all, if you're going to if you like Jpmorgan, I would personally go out further. So again, this is all for information purposes. But why would you want to pay $320 for calls that expire in? So again, you have to get two things right here. You have to get the direction right. It's got to go up decently for you to make money. You've got to get the timing right too. So you got to get two things right. Why not go out to August calls? Why not go out to September calls? If you're gonna use that as a swing trade, you cannot really use one thing that I've learned with options. If you are playing with front month options, you know that you are swimming against the tide, right? Every day that you hold that position, there is big theta decay that is working against you. So I provide this example because I think so many retail traders are following things that they see on Twitter, and they're not even thinking about the risk that's involved, right? So this trade may work tomorrow. Jpmorgan could go up tomorrow. I think the banks do have a little bit. They had some strength today anyway, and they could continue from that. It's actually a decent move from this move up here and a little bit of a flag, but it is so hard to get both right. It is so hard to get both the direction and the timing right. And if you don't, like I said, that clock is always running against front month options. So be mindful of that. There's no reason why you can't take a small trade, but for me, not my game to be doing that. So what else do we see in option activity today? Yeah, a lot of trades, but you have to, like I said in the beginning of this video, the market, the tape is not rewarding, guys who buy a little bit of calls. So let me just finish the conversation about energy. At this point, I think you want to be taking targets. You want to be taking some money off the tape. I took some money off the tape. Off the table, excuse me, not off the tape. I took some money off the table today in rig. It managed to get through this reversal bar, but this is the second one I've seen now after a decent run. Maybe this thing comes in a little bit. So I took off half my position in rig. The only other energy positions that I have on, I have PBR on, which I've been holding for a while now because I love the beer. Just kidding. But I'm still in some PBR. I got into PBR on the cross of the 200-day moving average. So if it does violate the 20-day moving average, I'll be out of that trade. Again, have to take some profits in this market right now. It is too choppy to not be taking some money off the table. And I got out of Devon, so I actually reducing my energy exposure. I do think this move in Nat Gas is pretty interesting. There was some COG calls that were bought at the end of the day. So here's the Nat Gas chart. Waiting for that to come. Well, that's coming up. So this looks pretty good. I actually like what somebody was doing with COG at the end of the day, which is more of an oil and gas name. But this COG chart looks horrible. It's underneath the 200-day moving average, so I did not take that. Those COG calls that were bought. 10,000 of them that also look like June 25s were also bought as well in COG. So a name to keep an eye on. If it maybe set an alert, see if it at least puts in a bottom there, see if this support holds. But I did want to bring up this big XOP put order. A huge trade swept. So this one that went up, this was part of a spread. This was the 37.40 put spread that looked like it was bought. And then look at this order, $1.7 million orders. Excuse me, I can't speak today. $1.7 million of premium. So could be a portfolio hedge, could be somebody speculating. I mean, to me, now of course it's going to, energy names are going to move with oil, but doesn't that look like a reversal bar? So regardless of all that call buying in the morning and the call buying yesterday, you have to make your own decision. I'm not, like I said, I am not going to follow somebody who's buying weekly calls for 10 cents or for 20 cents, right? I will show you some examples. Let's see, what do I want to pick out here? Maybe CHK is a good example. 25,000 calls going up for this week. What? I mean, for 5 cents. What, for 5 cents or for 10 cents? 10 cents. So, yeah, the novice says, and people who are calling out option activity on Twitter, oh my God, 25,000 contracts trading for this week. Oh, for 10 cents. So really small capital being put to work for those. Let's see, do I have the right trade up? I can't even find the calls. Or for 39 cents. Look at what did CHK do today? Good luck with those weekly calls that people are jumping up and down about. Yeah, here's where they bought them. So, I don't bring this up in case you bought Chesapeake and to laugh, but I mean, you have to have a little bit of some sense with buying some of these names that are really overbought. So I try not to. I try not to put this stuff out on Twitter. I look at it, and I say, "Huh, that's interesting." And a couple of the trades, I'll say, "Hey, I'll try to send out one tweet about, hey, they're buying more of these names that are running with momentum." But I really don't think the odds are that you're going to make a lot of money buying weekly calls after a name is run up as Chesapeake has. I mean, and look at what this thing did today. So they're just momentum. So again, I'm saying it over and over so that you recognize these are not small. These are not smart traders, in my opinion. These are guys who are just following momentum with a small amount of money. All right, so let me get to a couple bigger trades that hit the tape. Interesting on the put side, there were a lot of IWM puts that were bought today. IWM is probably due for a breather, and I think it got it today. By the way, you can't blame the energy sell-off, the energy company sell-off on why IWM moved down. There's virtually no energy exposure in IWM. And I say this because I think every once in a while, like I see somebody and I've talked to somebody who's like, oh yeah, there's a ton of energy exposure in the small cap ETF. Nope, there's not. So if you don't believe me, which I understand, see any banks, REITs, software, biotech, commercial services, retail, healthcare, pharmaceuticals, computers. There's no energy in here. It's less than 3%. I shouldn't say no, but there's less than 3% of energy companies in IWM. All right, so that's not what happened with with IWM. So keep in mind, it does look like a bearish engulfing bar today in IWM. It has not lost any of the moving averages, but I would be a little bit cautious in here. You know, maybe we'll see a little bit of rotation. We actually did see a little bit of call buying in the Qs, which, by the way, most of these FANG stocks, they just seem like they just have lost the momentum. I am long Amazon. It's been doing nothing. I'm actually short put spreads. So when I say I'm long Amazon, I'm synthetically long. You know, I just need Amazon to kind of hang in here, and I'll make money when you're short put spreads. Netflix, I think, also looks interesting, but it just doesn't look like it's got the major momentum to it. It's sitting above all the short-term moving averages. Maybe it picks up tomorrow. IQ was a name that we played in the trading room today. Not a lot. You know, and this is a very risky name. I'm long 100 shares. So I bought 100, I think around $21 today once it broke this. And so nice little profitable trade today. XLI, this is a little bit confusing. You know, this is an area that I like, that I thought would do pretty good. There was 9,600 of the September 80 calls that went up today. That's a $950,000 trade, and I think that looks bought. Versus a little bit of puts that were also bought for July. But this is September, so they put this out with a little bit of time. I am long XLI. Didn't do too well in that trade today. One more trade to kind of, you know, again, there's a whole list of trades to kind of go over for the day. You know, they're all listed on my sheet. GBT. This is a name that has data out, I believe, on June 15th. I am long 100 shares of this name. I like the chart. I got long here. It's kind of faded back to the 50-day moving average, but big call buyer. Kind of I would think a binary trade. Pretty nice hunk of money, $800,000 here. And like I said, I believe that the data is due out June 15th according to the Bloomberg calendar. So pretty interesting trade there. Also, another interesting trade that hit the tape is another name that's been getting smoked is Weibo. Somebody came in and bought some calls in Weibo today. Underneath the 200-day moving average, so tricky. A lot of these Chinese internet names do have a high amount of implied volatility. Same thing, keep in mind with this GBT trade, look at the implied volatility. This is a very, very expensive trade, right? You can use implied volatility to tell you how much that the market maker is implying into that trade. They are implying 123% implied volatility, right? So normal, you know, SPY trades, what I think around 16, 17. You know, this is, you're looking at a 6 times more, 15. So call it implied volatility depending on what contract you look at. But let's say 15 versus an implied volatility of 123. So just bear that in mind. They're expecting a huge move in that stock to the upside or to the downside. All right, so that's it. I think I went more than usual for a daily recap. 18 minutes, that's too long. So let's let's go ahead and end the recap. And thanks for listening. But a lot of stuff and a lot of strategy to go over. Have a great night, everybody. See you tomorrow.